Welcome to the Riskwiser Zone, the show where we dive into the world of stocks and finance to help you make informed decisions about your investments. We're starting off with a big story in the financial world, as Kevin Warsh has been sworn in as the new chair of the Federal Reserve. This comes after a lengthy confirmation process, and Warsh has already made waves with his comments on the state of the economy and the Fed's role in it. He's laid out ambitious reform goals for the central bank, which he believes had lost its way in recent years. One of the biggest challenges facing Warsh will be dealing with inflation, which is currently above the Fed's target rate of 2%. The new chair has stated that inflation is the Fed's choice, and that it can use interest rates to boost or discourage spending and keep inflation under control. However, this may involve making some tough choices that could conflict with the policies and goals of the Trump administration. Warsh will also be keeping a close eye on the global bond market, which has started to bid up interest rates due to growing concerns about inflation. His colleagues, including Fed Governor Lisa Cook, will be watching his every move, as well as the markets, which are already driving up long-term interest rates in anticipation of potential rate hikes. The Fed's next meeting is scheduled for June 16-17, where policymakers will vote on interest rates and submit new economic projections. One of Warsh's first major decisions will be whether to reveal his views on where interest rates will be at the end of the year, which could either align with his colleagues or make him an outlier. As we navigate this complex financial landscape, it's essential to stay informed and up to date on the latest developments. We'll be keeping a close eye on Warsh's tenure as Fed chair and providing you with expert analysis and insights to help you make sense of it all. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. As we dive into the world of tech stocks, it's clear that AI is the buzzword on everyone's lips. And why not? With its potential to revolutionize industries and create new opportunities, it's no wonder investors are eager to get in on the action. Today, we're taking a closer look at two tech giants that are making waves in the AI space, Snowflake and ServiceNow. Both companies have been touted as potential recovery bets, with some analysts predicting big things for their stock prices. Let's start with Snowflake, shall we? This cloud-based data platform company has been making headlines with its AI data cloud platform, which enables organizations to build, use, and share data, applications, and AI. And it seems like the market is taking notice. Benchmark recently increased its price target on Snowflake from $190 to $200, citing strong adoption of its AI-driven products. But it's not all smooth sailing for Snowflake. RBC Capital reduced its price target on the company from $245 to $220, citing a tricky outlook. Still, with over 13,300 customers using its platform, Snowflake is definitely one to watch in the coming months. And then there's ServiceNow, another tech giant that's been making waves in the AI space. This company provides an AI-enabled enterprise platform for workflows across various business functions, and some analysts believe it could be a major beneficiary of the AI trend. Bank of America recently reinstated coverage of ServiceNow with a buy rating and a $130 price target, citing its deeply embedded workflow platform as a major advantage. Of course, there are risks involved with any investment, and ServiceNow is no exception. The company did report delays in its Middle East deal, which hurt first-quarter subscription revenue growth. But with a raised 2026 subscription revenue outlook and strong earnings results, it's clear that ServiceNow is still a force to be reckoned with. So what does this all mean for investors? Well, as always, it's essential to do your research and approach any investment decision with caution. While Snowflake and ServiceNow may have potential, they're not without risks. But for those who are willing to take the leap, the rewards could be substantial. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a look at the latest developments in the market. The Dow Jones Industrial Average has reached a record closing high, rising 276.31 points to 5,285.66, while the S&P 500 gained 12.75 points to 7,445.72, and the Nasdaq Composite added 22.74 points to 26,293.10. Despite the positive numbers, investors are still keeping a close eye on the situation with Iran, with market sentiment being highly sensitive to every headline. The fragile ceasefire is still holding, but it's unclear how much progress is truly being made behind the scenes. In earnings news, Walmart shares took a hit, tumbling 7.3% after the retailer forecast second quarter profit below estimates and maintained its annual targets. On the other hand, IBM saw a significant gain of 12.4% on news that the Trump administration will be funding a handful of quantum computing companies, including a new IBM venture. The Philadelphia Semiconductor Index finished up 1.3%, with investors viewing NVIDIA's upbeat second quarter revenue forecast and $80 billion share repurchase program as a positive sign for the group. However, some investors are taking profits, causing NVIDIA's stock to fall 1.8%. As we look at the bigger picture, jobless claims fell last week, pointing to continued labor market resilience, while manufacturing activity rose to a 4-year high in May. These numbers suggest that the U.S. Federal Reserve may keep its focus on inflation risks. It's essential for investors to stay informed and adapt to the ever-changing market landscape. As always, we recommend a balanced approach and caution when making investment decisions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.